What's up, millennials? Today we're going to take a look at the valuation of eToro. This is an investing platform mainly in Europe, and this is going to be acquired by the SPAC that's currently trading under the ticker symbol FTCV. Before we start, if at any moment during this video you don't really know what I'm talking about, please check my full SPAC guide that I released a few weeks ago. The link is going to be somewhere in the description beneath this video, and today we're going to be taking a look at method number 2. Also, if you want access to the Excel sheet I'm going to be using today, then you can join our Discord for free to get access to that Excel sheet. You can just join it by going to nesami.com/discord. You can then leave your name, leave your email address, and you're going to get access to it. And of course, don't trust me, verify me. Always check what I'm doing. Always check if the calculations are actually correct. Always don't copy my numbers as is, but use your own multiples to come up with your own fair price per share. As I've said, eToro is an investing platform and they are mainly active in Europe, also in Asia. We can see that they have already a current proven track record, which is what I like currently about SPACs. They had a nice little boost in the amount of users they had in 2020 because, of course, many new retail investors got into the stock market in 2020. And they also had $605 million in revenue in 2020, which was a nice 147% year-over-year growth. So let's see if they can continue that stretch. That would be pretty epic. Now, they don't just have stocks on their platform, they are also looking at cryptos. And if you go through the entire presentation, the investor presentation, you can see that there is quite a big focus on Bitcoin as well in this presentation. With regards to the merger date, we don't have a date just yet, but according to some articles, they are looking to merge somewhere in Q3 of this year, very likely. Then if we look at the pro forma valuation of this company, we can see in the investor presentation that they have an implied market cap of a little bit more than $10 billion. And that is, of course, based on a price per share of $10 per share, which is where they started trading at. So that means that the amount of outstanding shares after the merger is going to be a little bit more than $1 billion because, of course, multiplying $1 billion shares by $10 per share is going to give you that implied market cap of $10.4 billion. So those are the numbers that I put over here in my Excel sheet to arrive at that market cap of $10.4 million or billion dollars rather. This, of course, is quite a larger SPAC compared to some of the other SPACs we have been looking at. And we can also see in their investor presentation, they are going to have $796 million in net cash on their balance sheet after the merger. So that means you can already calculate the enterprise value by taking that pro forma market cap of 10.4 billion, subtracting the amount of net cash of almost 800 million, and then you can arrive at an enterprise value of $9.6 billion, which is also the number over here in the investor presentation. The thing, however, is if we go into TradingView, we can see that the price has gone up a little bit from that level of $10 per share. It's right now sitting pre-market at $13.07. So that's a number that I put over here in my Excel sheet. And that already means that the pro forma market cap and the pro forma enterprise value have also gone up because of that price increase. So that means that the current pro forma market cap is sitting at $13.6 billion. And again, subtracting that amount of net cash, we're going to arrive at a pro forma enterprise value of $12.8 billion. But we, of course, want to know what a fair price per share is. And for that, we first need to go back to a fair enterprise value. How are we going to do that? Well, we are going to be taking a look at a fairly simple formula for this. First of all, we're going to be taking a look at the revenue of a certain year. And for this video, we're going to be taking a look at the revenue of 2022. So the expected revenue, of course. We don't know for sure if this is going to happen, but this is what they expect to have in 2022. And we also are going to take that revenue of 2022 and we're going to apply a certain range of multiples to that revenue to apply, or to arrive rather, at a fair enterprise value. So again, we need two numbers, the revenue and the multiples. Let's first take a look at that revenue of 2022. We can see in their investor presentation that they expect to have a net amount of revenue, so basically the revenue minus the trading costs. That is going to be in 2022, $990 million. So that's the number you can put over here in your Excel sheet next to EBITDA revenue. $990 million, and that's the revenue, net revenue for 2022. And now we're going to need a fair range of multiples. For that, we're going to be taking a look at the revenue multiples of other companies, other similar companies out there in the same sector. Because the question is, what is a fair range of multiples? Because as we can see, the current, if you look at the current enterprise value, or at least based on the $10 per share, you can see that the current multiple of eToro is 9.7x. Question is 9.7x too high? Is it maybe too low? Well, we're going to take a look at what the multiples are for other similar companies out there. First of all, we can see that there are high growth fintech companies like PayPal, Adyen, Bill.com, etc. And these have a very high multiple of 26.2x. Question is, maybe eToro is not exactly similar to these companies, but hey, we're going to take a look at that later on. Then we can see that there are also some high growth international brokers like Futu and XP Inc. I don't really know these companies, to be very honest with you, but these have a multiple of 17x. So that might be a little bit more reasonable for eToro as well. And then you have some developed tech-led brokers like Avanza and Interactive Brokers. Interactive Brokers, of course, is a quite popular one, and these have a multiple of 12x. Now you can see one important difference with regards to the compound annual growth rate of 2020 until 2022. We can see that the high growth fintech rate is very close to eToro ones. And then we can also see that the high growth international brokers has a higher compound annual growth rate of 45%, and the developed tech-led brokers just a compound annual growth rate of 3%. So the question is, based on this information, these multiples, what do you think is a fair range of multiples, right? That is the question that I have for you, and you can also leave that in your comments. What do you think is a fair range of multiples for a company like eToro? Personally, I've come up with a range of multiples of 12x on the low end, based on this multiple of the developed tech-led brokers, and a high multiple of 20x on the high end. So a little bit higher than the multiple of the high growth international brokers, to even arrive a little bit in the direction of the high growth fintech companies. So let me know if this range is fair according to you. Maybe you think the range should be a little bit different, maybe it should be lower, maybe it should be higher. That is up to you. Okay, so always use your own multiples for a calculation like this. Well, the rest of the calculations are going to be done by the Excel sheet if you have the Excel sheet. What it's going to do is the following. It's going to take that revenue of 2022, which was $990 million, and is going to multiply that, first of all, by the low multiple of 12x to arrive at an enterprise value of almost $12 billion. Then it's also going to take that same revenue of 2020, it's going to apply that high multiple of 20x to arrive at a high valuation, high enterprise valuation of almost $20 billion. So then we can also say, all right, the midpoint valuation, which is basically the average between the low multiple or the low enterprise valuation, the high enterprise valuation, is going to be $15.8 billion. Very well. And by the way, this is method number 2. So we're looking at the same or multiples from the same year. We don't need to discount these back to the present. We can just take a look at these numbers without needing to discount them. Okay, so we have these enterprise valuations. We, of course, want to know what a fair price per share is. First of all, we need to go back to a fair market cap. How do we do that? Well, in the beginning of this video, we said that the difference between an enterprise value on the one hand and a market cap on the other hand is the amount of net cash they are going to have on their balance sheet. And we said that was going to be $796 million. So then we can take those enterprise valuations, add back the amount of net cash they are going to have on their balance sheet, and then you're going to arrive at these fair market caps. So on the low end, 12.7 billion, midpoint valuation, 16.6 billion, high valuation, 20.6 billion, of course. And then you can take those market caps and you can divide them by the amount of outstanding shares after the merger, which we said in the beginning was a little bit more than 1 billion shares. So if you do that, you're going to arrive at these fair prices per share. For the low valuation, $12.20. For the midpoint valuation, $16.01. and for the high valuation, $19.82. So based on these calculations, that could mean that eToro is currently undervalued. Now, of course, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. So we've taken a look at a future revenue of 2022. We don't know if this is going to happen for sure. We've applied a certain range of multiples. Maybe you believe that the range of multiples should be lower, maybe it should be higher, but do keep in mind that if you change one of these numbers, the entire calculation is going to change and your fair price per share is going to change as well. So let me know in the comments, what do you believe is a fair range of multiples for this company, for eToro? And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!